Trade tensions between China and the U.S. seem to be reaching new heights following a decision by Google regarding Huawei. And South Korea is keeping a close eye on the situation to minimize the negative impact on the local economy. Kim Hyesung reports.
Finance Minister Hong Nam-gi is warning the escalating trade tensions between the U.S. and China could affect the South Korean economy more seriously than previously thought.
The government will prepare for all possibilities and strive to minimize the impact on the local economy.
The world's two largest economies are South Korea's top two trading partners and together account for nearly 40% of the country's total exports. Given that near 80% of Seoul's exports to Beijing are intermediary goods, the Korea International Trade Association says the U.S. China trade tariffs, including Trump administration's 25% tariff hike on $200 billion worth of Chinese goods this month, could pull down South Korea's overall exports by 0.14% or more. Minister Hong said despite South Korea's record foreign currency reserves, volatility in the local financial market and $1 exchange rate have increased. He also vowed to monitor markets closely and take necessary countermeasures if required. The benchmark Kospi has fallen to a 4-month low and the Korean won has weakened to nearly 1,200 won against the greenback. To help exporters, the finance minister again called on the National Assembly to pass the extra budget bill as soon as possible, which includes over $900 million in trade-related financing and export marketing. He added the government will continue to diversify South Korea's trading partners and come up with measures to support local exporters in consumer goods and services by June. Regarding the Trump administration's announcement to delay its tariff decision on imported cars for 6 months, he said the government will continue all outreach efforts and help strengthen the competitiveness of South Korean automakers. Kim Hyesung, Arirang News.